The US dollar is picking up steam again amid decreasing bets on the rate cut by the Fed Reserve. Moreover, the global economic environment favors higher interest rates for a longer term. As a result, the main world currency is again in bullish momentum. In contrast, the likelihood that the ECB will cut rates next month is estimated at almost 90%. For example, the pound sterling came under pressure from the US dollar today after the release of a weak report on retail sales in the UK. The level sank to minus 2.3% from a month ago and turned out to be much worse than forecast for a fall to minus 0.4%. It was also the biggest decline in retail sales in 4 months. In the United States, the S&P Global Composite PMI confirmed that business activity improved to its highest level in more than 2 years. With a forecast of a 51.4, the actual index rose to 54.4. Yesterday, the reports on the initial claims for unemployment benefits showed a record drop over the past 6 months and came out at 215,000. The median forecast suggested the figure at 220,000. Fresh statistics again confirmed the fact that the US economy still looks healthy enough to take a long pause before the first rate cut. That's why today the US dollar index achieved its biggest weekly gain in a month and a half. Good economic data as well as the hawkish minutes from the latest Federal Reserve meeting have forced markets to revise their forecast of rate cuts. At the beginning of the year, market participants predicted the overall rate cuts of about 150 basis points, and now this figure has fallen to 35 points. In this context, the value of the US dollar relative to its 6 main peers after yesterday's rally is consolidating today in the range of 104.9 to 105.10. These same factors brought down the Wall Street indexes. As a result, the Dow Jones posted its worst session in more than a year. The S&P 500 index opened on Friday, consolidating in a narrow range of 5,256 to 5,341 points. At the same time, the dollar received resistance from the euro, and the red-hot reports on Germany's GDP growth rates showed that the German economy expanded in the first quarter. GDP rose by 0.2% sequentially, following a decline of 0.5% in the previous quarter. Upbeat economic performance in the United States, of course, dealt a serious blow to the single European currency. But today, the euro has a chance to win back its losses from yesterday in full. The euro-dollar pair rose during the European session, trading higher within the intraday range of 1.0808 to 1.0834. Perhaps the euro will be able to assert its strength during the New York session. The reason may be the report on the durable goods orders in the United States. As expected, their volumes are likely to contract by 0.5%. Let me remind you that this indicator indicates the level of consumer activity, which is exactly the engine of economic growth. So, a decline in the durable goods orders will put pressure on the US dollar. In turn, the euro will take advantage to strengthen, although the single currency is still pulling back from the resistance level of 1.09. Meanwhile, the greenback has already advanced against the euro by 0.8%. If the bears come back into play and start selling the euro, they will need to stabilize the price below the critical support of 1.08 to consolidate their position. Otherwise, this level of 1.0800 could become support, and the main currency pair will try to reclaim its 2 months high around 1.09. Crude oil seems to have finally lost its momentum and is poised to finish the week lower. In the meantime, the benchmark Brent has already broken the round support at $81 and continues to decline within the intraday corridor of 80.6 to 81.5. But although formally Brent crude is trading below $82 per barrel, and the price has been hovering around this level. Investors' hesitation is caused by the expectation of a reaction from Moscow and Riyadh, which is likely to follow only if prices drop to $80 per barrel. Thus, Brent crude is expected to drift in this direction. Moreover, at first the movement will be extremely cautious, but will begin to clock into gear over time. As you can see, Brent has already updated its local low, which indicates the activity of sellers. In a case of further weakening in the Brent price, it may decline to at least the level of 80, and now all the market's attention is turned to the upcoming OPEC Plus summit scheduled for June 1. To sum up, Brent crude risks losing even up to 3%. You have watched the market review by InstaForex analyst for Friday, May 24. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments down below. See you online next week.